Test, 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 test. Hey, can you guys all see my screen and hear me? If you guys can all see my screen and hear me, just give me a heads up. If you guys can see my screen and hear me, give me a heads up here. We'll start here in a couple of, like 2 or 3 minutes here. Just want to make sure everybody that's coming in can get in. And then we'll start it here. How's your guys' day been? Where you guys all from? San Diego. You're not from San Diego. Boston, thank you. Tucson, Phoenix. Crazy stuff after the bell. Yum's up like $4. Fossil and Nordstrom just getting annihilated. Crushed. So retail continues to get crushed after the bell. New Jersey, you had a bad day today? Yeah, I lost a little bit of money. I lost a lot of money mostly in AIG. I have a position on an AIG that I didn't do so well. Where's Bolt at? Right there? Show you. Burl. They have earnings? All right, let's get this show on the road here. I'm going to record this. If you guys have any questions throughout the presentation, please feel free to ask questions. We'll be on here for about 30 to 45 minutes. Today is going to be trading earnings using measured move targets. I'll be your presenter today, Andrew Keene. If you guys have never seen me present before, past performance is not indicative of future results. Little risk disclaimer here. We put this in every single webinar we do. Day trading, short-term trading, option trading, and futures trading are extremely risky. They are generally not appropriate for someone with little capital, little to no trading experience, and or a low risk tolerance. Never execute a trade unless you can afford and are prepared to lose your entire investment. No trades are recommendations or advice, and we cannot be sued for losses of capital. Myself, Christian, James, John, none of us are registered investment advisors. We cannot tell you how to trade your own capital. We can just tell you how we are trading our own capital. Contact your broker or registered investment advisor for execution, margin, and other capital requirements. Everybody watching today's presentation adheres to all risk disclaimers on www.optionhacker.com and www.alphashark.com. So that is the fun portions of it, the disclaimer, and let's go into it. So this is me. I am in the middle here. I'm not on the right. So I'm in the middle here. This is me. I studied at the University of Illinois. I think it's the ranked 46th best school in the United States. So I like to consider myself fairly intelligent, but I've never read any computer programming, any algorithmic-based trading. Everything I trade, is off my head, off the cuff, and I put on reward to risk setups, trades that I think have a good chance of making money. Over the last 14 years, I've been profitable 12 of the last 14 years. This year, I will admit, I am down money, but I still have some time left in the year to possibly get that money back. But this has been kind of a challenging year and a rough year for me trading so far. I was a market maker at the floor of the Chicago Board Options Exchange for 10 years. From 2006 to 2009, I was the largest independent trader in Apple in the world, and that was kind of my bread and butter, trading Apple. I continue to trade Apple. I'm a very active trader. I was watching some guy's presentation, and he was saying all these things about winning trading competitions, and some trading competitions have two people in them, so one person's got to win, right? So I was just kind of funny listening to that earlier today. So trading competitions are really great. I'll just show you my P&L, and that's how I trade. I show all my subscribers my P&L throughout the course of the day. So after basically I was on the trading floor till it went insolvent, and then all the markets became penny-wide, and weekly options came in there, you know, it was the worst time ever for a market maker, but became the best time ever for a retail trader. You guys are retail traders, and this is the best opportunity ever to trade equity options. So now I live in sunny San Diego. It's actually been cold the last couple of days. I moderate my trading room from my condo, which is right here. I'm on the 22nd floor facing west into the bay and the ocean. This is my new whip. Learned a new word when I moved out to San Diego. Never heard of that one in Chicago. But this is my car that I got out here for my trading profits. I moderate and trade from San Diego. I'm sure you guys have seen me on CNBC, Bloomberg, Fox Business, Sky Australia, BNN Canada, WCIU. I don't do that much TV anymore. I do CNBC online about 3 times a week. But, you know, I've kind of been out of that. James, my other moderator, is on TV a lot more. So, and there's a couple pictures of me on CNBC. I don't even know when this was. It's probably this year. Here's one, and here's another one. Boom. Enough about me. Let's talk about trading earnings, okay? We saw some earnings after the bell today. We saw Nordstrom report very poor earnings. Nordstrom getting whacked here in the after hours. And then we also saw Nordstrom down $10. And we also saw Fossil selling off on earnings. So 2 more retail stocks that are getting hit, Fossil and Nordstrom. We saw Macy's getting hit the other day. So someone looks like they're really getting burned here a little bit. But there's a perfect opportunity. I know James is my head earnings trader, and he got short Fossil in the earnings. So he'll have nice profitability in Fossil. So what are earnings? This is the perfect time to learn how to trade earnings properly, okay? Earnings creates high risk, high reward setups, okay? So we like to trade them through the option market. Publicly traded companies release their earnings every quarter. So 4 times a year, every stock announces their earnings. They announce their top line and the bottom line. Top line is their revenue. Bottom line is their earnings per share. Companies announce this every single quarter. They will also provide guidance for future earnings. Earnings are a very important factor in the stock's price because the earnings announcements are very widely watched and can produce big volatile swings. I used to get emails from a lot of people, and they'd say, hey, you know, I bought calls in Apple. Apple went up, but my calls went down in value. Andrew, it's a scam. How is it possible that my calls went down in value as the stock went higher? Okay, that is known as something called implied volatility. Okay, so it is possible for stocks to move in your direction and for you to lose money if you only have call and puts on. Every time we trade earnings, we like to trade earnings through spreads, call spreads, put spreads, put flies, call flies, calendars, iron butterflies, iron condors, and we have a course that's going to teach you exactly how to know which strategy to put on for every single scenario. Why trade earnings? That's a very, very good question. The wild swings in a stock's price around earnings creates opportunity for traders to profit. These movements can expose a trader to large amounts of risk if they're not careful, okay? So, common rookie mistakes. I like to teach you guys what you could do wrong when trading earnings. Common rookie mistakes are stocks gapping up or down. You know, a stock can move a lot on earnings. drop in implied volatility. We talked about that one. If you live in the land of the hopes and the dreams where you're constantly buying calls or buying puts, it's probably not the best bet. If I have a position based on unusual option activity, and I usually take it off before earnings. Okay. High premium levels. What is implied volatility? If you think about what implied volatility is basically simple and easy. It's a mathematical equation of future volatility. Okay. There's two types of volatility. There's historical volatility. That shows how much a stock has moved in the past over a given period of time, 20 days, 50 days, 100 days. And then there is implied volatility. Implied volatility shows us how much they are implying the volatility can be in the future. Okay? Volatility is higher during times of uncertainty. When is times of uncertainty? Times of uncertainty are times with earnings, possible drug announcements, mergers, acquisitions. So those are times of uncertainty. Okay? So that becomes very, very volatile. After the uncertainty is over, then implied volatility goes down in value. Okay? You could make money off long calls or long puts, but we like to spread our volatility risk out. Volatility is one of those factors that a trader cannot control. Trader can try to trade, being bullish or bearish, but a trader cannot control implied volatility. So we're going to teach you guys the proper way to trade earnings in the option market. Okay? I don't like to take stock before earnings, but in the option market, you can potentially put on a trade that you can get 5 to 1, 8 to 1, even 10 to 1 on your money on an option trade. Poor risk versus reward setups. That's another very important one. When I'm trading, everything is a reward to risk setup. If someone said, hey, Andrew, I want 95% of my trades to be winners, that's very easy for me to do, because I would sell a $1 call spread for 1 penny. That's very, very easy to make sure 95% of your trades are winners. Doesn't mean it'll be a profitable strategy in the long run, but 95% of the trades will be winners. Okay? So I don't sell dollar call spreads for 10 cents. I don't sell dollar put spreads for 10 cents. Okay? Those are not proper reward to risk setups. So when I'm trading, I always got to look at my risk and I've got to look at my reward. I can compare trading to so many different analogies. One analogy is, let's say you're playing golf. Let's say we're playing basketball. I like basketball a lot more. And I go with my buddy and he goes, hey, I can make a half-court shot. Well, I'll bet him he can't make a half-court shot. There's a probability, the math is in my favor. What about if he said to me, hey, I want 10 to 1 odds on that shot? Well, there's a chance that he could, so I'd probably not make that bet. So when trading, you got to think of reward to risk setups. How much am I willing to risk on this trade versus how much I can potentially make? Good traders always think about how much money they can make. Great traders say if they're wrong, how much money can they lose? So make sure you guys are setting up proper reward to risk setups. Then poor chart analysis. They always say if you put on a trade and you lose money on that trade, you probably put on poor chart analysis. Make sure you set up proper chart analysis. My favorite thing for charting is the Ichimoku cloud, otherwise known as Ichimoku Kinkin Hoi, but feel free to use any charting that you want. Okay, trading earnings. Picking stocks to trade. Earnings, I do trade. Okay, there are 8,700 stocks out there. There are 4,199 with options in those companies. I will, in theory, trade any stock. Okay, my personal favorite are ones that have widely held markets. Okay, we talk about penny-wide markets. And a lot of times someone says, hey, AK, what's a penny-wide market? Something like JP Morgan. I love trading the banks for earnings. I like trading stocks with weekly options. Oftentimes, if they're not weekly options, I will not trade it. Okay? So if there's no weekly options, I won't trade it. You guys are up to your discretion to trade anything you want. But my favorite ones are weekly options and penny-wide markets. Okay? Penny-wide markets mean the options are quoted in pennies. 27 bid at 29, 30 bid at 33. Those are penny-wide options. Okay? So I like to take trades with penny-wide markets. And I want to make sure I get a good reward to risk setup. So my favorite stocks to trade are popular, widely held stocks. You know, I like to trade a Priceline, an Apple, a Google for earnings. Types of strategies I employ. Okay, I trade many different types of strategies. I do call and put verticals, call and put butterflies, condors, iron condors, iron butterflies, and calendars. These strategies will often offer a trader a better reward to risk setup. Okay, buying puts and calls, I'm not saying it can't work, but it doesn't give a trader, you know, the probability and the math in their favor. Okay, let's talk about Fossil today. I just want to go over an example, and this is a trade that my head trader on James Romelli put on. And we have something. Let me take out a Word document. It is called the HIM Cribbit Trading Plan. So let's go over Fossil, and I'll show you the guys the exact trade that James put on in front of my whole subscribers. So, and we're going to call this the HIM Cribbit Trading Plan. You guys can write this down. You can take a picture of it. Okay. So the first thing I look at is the historical movement. So H stands for historical movement. And if we go into Fossil, let me bring up Fossil here. I can bring this up. So here in Fossil, you see the historical movement, and we can just write this down here. Over the last 8 quarters. And this is a trade that my head earnings trader put on for today. Okay. And I'll share it with you guys. Okay. So over the last 8 quarters, the stock has moved negative 2.3%, negative 6.7%, negative 15.7%, up 8.4%, down 2.9%, down 5.6%, down 10.3%, and then up 3.5%. Okay, so over the last 8 quarters, the stock has sold off 6 of 8 quarters. Okay, so if I said to myself, someone put a gun to my head and they said, AK, the stock has sold off 6 of the last 8 quarters. Do you think it's going to rally or sell off? Obviously, I think the stock is going to sell off once again. Then we have what is called the measured move target. So the implied move, let's go back to this one. Implied movement, and you guys can use this trading plan in anything you want. Okay, you can use this HIM Cribbit trading plan that I'm teaching you right now to trade any earnings you want. The implied movement, as we see here, is right around $6. So this 51 weekly straddle is priced at $6, so it's implying a $6 move or 11.7%. Okay, does everybody see where I get that? Then what we have is called the measured move target. We always have an upside measured move target and a downside measured move target. So the measured move target, what we do is we just add the straddle price and subtract the straddle price. So measured move target to the upside is 51 plus $6, which is 57. And then the downside is 51 minus $6, which is 45. So if someone put a gun in my head and they said, AK, what do you think the stock's going to do? Do you think it's going to move up or do you think it's going to move down? Okay, let me just move these fonts. This is a real-time example that happened today. Okay. Then what we have is the chart. So let's bring up the chart here of Fossil. We can walk through this example together, guys. So Fossil, on the daily chart, is it bullish, bearish, or neutral? So we can see here, this is a pretty bearish looking chart, a new 52-week low. Straight down, clear bear channel. Obviously, it looks like the stock's going to go lower. Okay, so the chart is bearish. So knowing it's sold off 6 of the last 8 quarters and the chart is bearish, where do I think the stock's going to go? I think the stock is going to go lower. Okay, so the chart is bearish. It's under the Ichimoku cloud. Okay, so then James came in. He said, let's put on a trade here. Okay, what trade do I want to put on? And he said, let's just buy a put spread. It's a good reward to risk setup. And he literally just announced this trade about 20 minutes ago. Okay. Okay. So the trade was buying the Fossil weekly. So the target 47.45 bear put spread for 80 cents. Okay. So this is a trade that was just put on, guys, and announced live. Okay. Let's talk about the breakdown of this trade. We have the risk. What is the risk of this trade, guys? If you buy the put spread, okay, if you buy the 47.45 bull put spread, what is the risk of the trade? Great, 80 cents or $80 per one lot. Okay, $80 per one lot. What is the reward of this trade? $120 per one lot. Great. So let's go in here. The reward is $120 per one lot. Let's make these all a little bit smaller. Okay. So my risk is $80, but my potential reward is $120. Okay. So there's my risk and there is my reward. Break even. We always want to know our break even on expiration. So our break even is going to be 47 minus 80 cents. So 47 minus 80 cents, which is 46.20. Okay. Then we have TNT. Some people like tacos and tequila. Not saying I don't, but in trading, I like time and target. So let's look at our time, and this is weeklies. Okay. When I'm trading earnings, if there is weekly options, I always want to trade the weekly options. The reason for this is I want to pinpoint that earnings catalyst and then be done with the trade. Okay. So these are the weekly options. Target. We talked about the target. My target is those measured move targets. So $45 is my target. I'm always going to get the best ROI if I target the trade to where the stock can move. Okay? So I target this trade to where the stock can move, which is $45. Let's see where Fossil is trading right now. So I go to Fossil, and right now, wow, what a coincidence. It's trading literally $45. Okay? And this is how you guys figure out these measured move targets. Isn't that ironic? Isn't that weird? Isn't that coincidence? I literally just gave one example and picked a random example from a stock today, and it shows me exactly my measured move target. Went right to $45. So if Fossil is under $45 on expiration, I will make 150% returns, okay? Look at my reward of this trade and look at my risk. Risk 80 to make 120. So let me write this down. So if fossil, I'll do it in here instead. Okay. So if fossil closes under 45 by tomorrow, I will make 150% return on my capital, guys. Okay? And this is just an easy, simple way, and you guys can go through that HIM Cribbit trading plan whenever you want. You can do it in any stock, use that measure move target, and just go through it as simple as I did. Okay? So I wanted you guys to come here, and I wanted to teach you guys my proprietary based trading plan for trading earnings. Okay? And it works out so well so often. So let's go on with the presentation. Types of strategies. Be mindful of commissions. I always say commissions are killers. Commissions hurt. While strategies like butterflies, condors, and iron butterflies offer superior profitability, commissions can be heavy. Remember, you're paying about, on average, maybe $1 a contract. Okay, $1 a contract. So if you're putting on 4 trades and you're going to take off 4 trades, that's going to add up your commissions. So just always make sure you know the commissions. Remember, trading in vertical, you'll be charged twice, once you put it on and once when you put it off. Okay? But they set up huge potential profits. And I just showed you an example here in our that stock. So this is the proprietary based trading plan. I kind of went over for you guys. Let's go over it again. This is what I call the HIM Cribbit trading plan. CRRBTT. Okay, you can take a picture of this. We'll send the recording out. The first thing, historical movement. How much has the stock moved historically over the last 8 quarters? Okay. Does it historically move up or down? To be honest, I'm not an analyst. I don't care if they beat on the top line or the bottom line. All I care is what the stock does. Does it go higher or does it go lower on earnings? That's all I really care about. So historical movement. How much does it move and which direction does it move? Then we have the implied movement. I can look at the weekly at the money straddle. So I add the price of the puts to the price of the calls, and that gives me the implied movement. Then we get measured move targets, and we're always going to have 2 measured move targets. We're going to have one to the upside, and we're going to have one to the downside. So measured move targets. Then we have the chart. How does the chart line up? I only want to take bullish trades in a bullish looking chart. I only want to take bearish trades in a bearish looking chart. The problem with most traders, and the number I always throw out is 90%. 90% of all traders lose money. Why is that? They set up bad reward or risk setups. They're trading against the trend. Okay? So make sure when you guys are trading, use those measured move targets and use reward to risk setups. Okay? Then we have break even. It's always important to know your break even. Okay? It's just always important. Then we have R&R. Some people like rest and relaxation. I like reward to risk setups. Okay, how much am I risking on a trade versus how much can I make? Okay, that's how I look at put flies, call flies. I can look at how much I'm risking one of 2 ways: as a dollar amount or as a percentage of my total book. So how much am I risking versus how much can I potentially make? Then we have TNT. Some people like tacos and tequila. Taco Tuesday originated in San Diego. I like time and target. How much time have I given this trade? If possible, I like to trade the weekly options. If there are no weekly options, then I won't. I will trade the monthly options. But in general, I prefer to trade the weekly options. Okay? So that is the HIM Cribbit trading plan broken down for you guys. You can use this in any stock that you're using. Yes, we will send out this recording as well. Okay. Okay, so let's talk about it and break down every single component of this so you understand this better. Historical versus implied volatility. To trade earnings successfully, a trader has to understand the difference between historical and implied volatility. Historical volatility measures realized fluctuations in a stock price over a period of time. It will show sharp moves in the stock price. Then we have, it's calculated either by looking at past price changes. Then we have the implied movement, okay? Implied movement, how much they're implying it can move on earnings. And we can look at measure move targets of this, estimate of volatility in this. Will it move up or will it move down? Key component of option pricing. Then we have the implied movement, okay? So we saw Monster. Monster is trading 131.15. Historical movement, that was AXP. So in Monster, the at-the-money straddle was priced at 870. So this is another example of how we went in there in the option market and got a great return on our money, MNST. The options were implying a 6.6% move. Okay, so we can use that target to calculate our measured move targets. So this is another example, guys, of another profitable trade. And this is what we're going to teach you in the workshop, how you can put on these trades and trade setups. Okay, trading earnings is a different mentality than trading unusual option activity or trading outrights. Okay, you have to have good reward or risk setups using those measured move targets. So Monster at the money straddle was priced at $8.70. Okay, so I can pull up any stock. I can pull up SPY right now. Let's go to SPY, and I can look at how much they're implying the stock is going to move between now and the end of the week. So SPY straddle here, just between now and tomorrow. Okay, they're implying a 90 cents and $1.70. So they're implying in the SPY it's going to move $1.60 between today and tomorrow. Okay, so the option markets is implying a $1.60 move between today and tomorrow. So you can always look at these measured move targets when you are trading. Let's go back here. Someone has a question. Someone says, do you recommend doing double butterflies or double calendars, hoping a movement makes more money in one direction or make up for the loss in another trade? That's a great question. And I know McMillan, who's one of the greatest option educators in history, talks about double calendars and double butterflies. I do not like this. I like to choose the direction based on the chart and based on which way the stock has moved. Okay, if a stock has moved down 6 of 8 quarters and the chart is bearish, there's a better probability the stock goes down than up. So why would I put on a double butterfly or double calendar? I want to take advantage of the fact that it's moved the same direction. Okay, it's like a sports team, right? Like I said, I have so many different analogies when I'm trading. It's like a sports team. If a sports team has won 8 games in a row, there's a better chance they win again. Okay, so I think the best way to do it is look at the chart and then look at how much the stock has moved over the last 8 quarters. So we have a measured move target of the upside of 139.85, and we have a downside measured move target of 122.45. Let's look at a chart of Monster. I like to look at the Ichimoku Klinken. Let me just see something real quick. Sorry, James had the wrong one in there. Current slide. Okay, so I like to look at the Ichimoku Kinken Hoi, okay, to identify the overall trend. Stocks work best on the daily chart, but I can also bring up the weekly chart and the monthly chart as well. So Monster on earnings, okay, it was in a neutral pattern, but it could break either way. It wasn't over bullishly or wasn't over bearishly, okay. So it popped up here and it did sell off a little bit, but I think Monster goes higher into earnings. So what's the spread we want to put on, okay? As we see here, if we go back and back and back, I always am targeting that measured move target, okay? So the strike I want to sell is the strike of its measured move target. So first I need to decide bullish or bearish, okay? And in the course, we're going to teach you guys how to know when to put on butterflies versus just call spreads, when to put on iron butterflies, okay? So in the course, we're going to break down everything. When to put on a call spread versus a put spread. When to put on a call butterfly versus a call spread. When to put on an iron butterfly and take advantage of implied volatility. In this case, we wanted to measure that 140 line. So I wanted to be short the 140 strike, okay? So I want to get short the 140 strike. Another question here. But lots of stocks lately have beat on earnings but crappy dividends. Yeah, it doesn't matter if their earnings and the revenues are good. All I care about is what the stock does. Okay, so Monster, okay, decided to come in here and put on a reward to risk setup. Okay, so let's break down the trade in Monster. With the chart showing Monster as a neutral pattern and the historical movement showing a bullish setup, okay, I want to get long Monster. Okay, I bought. And actually, James did this trade. He's our head earnings trader. The Monster, MNST, weekly. Okay, we always try to trade those weekly options if it is a possibility. The MNST weekly, 137, 140, bull call spread. 137, 140, bull call spread, 4.80 cents. The risk on this trade is $80 per one lot. The reward is $220. Break even, 137.80. So this trade sets up about a 300% potential reward if MNST can close above 140 by expiration. Okay? If MNST can close above 140 by expiration, the spread will go to $3. I paid 80 cents for it. So 220 divided by 80 is roughly 300% of profit. And this is how we use the option market to get a better ROI, return on investment. Okay, so I'm getting 3-to-1 return on investment potentially on this trade. What happens in Monster? Boom, rips to the upside. Okay, so we see it rips to the upside here. It breaks through that 140 level. The stock went up to 150. Okay, as the stock gaps higher, okay, I make money on this trade. This call spread would go to $3. Okay, so great profits on this trade. Time and target. Okay, with that spread expiring the next day, I can just leave my trade on until the end of the day. The long 137s will come to long stock. The long 140s will come to short stock. I'll have nothing to do. Okay, so two examples just like this. Fossil and Monster, one yielded 150% return and one yielded 300% return in the course of overnight. Okay, so great trading earnings using the HIM Cribbit proprietary space trading plan that I taught you guys today, and using measured move targets. So we are offering a great course today. It's called Earnings for the Taking. Trading plan every trader must have, and it's on demand. Okay, you will learn proprietary step-by-step earnings analysis and trading plan. You will learn the best option strategies to trade ahead of earnings. Learn how to avoid buying too much premium and too much implied volatility ahead of earnings. And learn the best tools for trading earnings setups and how to trade setups. Okay? And using the Thinkorswim scan feature to find earnings. This course we are offering today for only 99 bucks. So let me put the link in here. It's optionsonthefloor.com/week. So let me just put the link in here. Okay. Let me talk about this course, and then I'll get into some charts here. So I know everybody likes to look in the charts. Okay. So options on the floor keene.com/week. It's only $99, guys. I will say a couple things about this. Number one, 100% money back guarantee. Every single course that I offer, we will give you your money back if you don't like it. So you're going to learn how to trade earnings and take your earnings plan to the next level. How to know when to do call spreads versus call butterflies, iron condors, iron butterflies. You know, who is this good for? This is good for anybody who wants to improve their profit, potentially improve their profitability, and also someone that wants to learn more about options. If you trade futures, you trade Forex, this course is not for you. 4 things I say about this course. Number one, 100% money back guarantee. If you're not happy with the course, we'll give you your money back. So basically, there's no reason to buy it right now, not to buy it right now, because if you're not happy with it, we'll give you your money back. Number 2, this is 80% off. It's a $499 value, but we are offering it today to you guys for only 99 bucks for having to listen to me for the last 45 minutes in this webinar. Number 3, we only have 25 spots available. I see my inbox blowing up. Barbara's taking advantage of it. Jim's buying it. John, Justin's in. So make sure you guys take advantage of this. We have 25 spots available. And number 4, this is a great, great course for beginner, intermediate, or expert option trader. Okay, you can be any of those levels and learn a lot from this course. It is optionsonthefloor.com/week. Okay, it's only $99 with 100% money back guarantee. And now we're going to go to about 10 minutes of questions. If you guys have any questions or you want to go through any charts, you can just fire any chart you want, and then I'll bring them up in here. Does anybody have any questions about any charts? Okay, Apple. Everybody always likes to look at Apple. Carter Worth was on TV saying Apple's going to 100 bucks. The market has really flipped in the last couple of days. You know, one thing that's interesting here in Apple is we see Apple has sold off from open to close 7 straight days. Wow. So Apple should have massive support right here at the cloud around 112. You know, I think Apple goes higher in the long run. I think this market's going to make still going to move higher. No, this is on demand. And number 4 actually about it was the minute you guys start paying for it, then you'll start learning immediately. The problem with live courses is there's a fulfillment date. And if you can't make the fulfillment date, you're just sitting there waiting. Okay? For this course, you'll start learning immediately. You can start learning how to trade earnings. And there's probably trades for tomorrow you can set up for Monday. And then let's go to Green Mountain Coffee. Very, very weak here. I think Green Mountain Coffee is a sale on any rally. So if Green Mountain Coffee gets to right here, I think it's a sale. And then put your stop above the cloud. I think Green Mountain Coffee goes lower. Alibaba. If there's any stocks you guys want to see, just fire your stocks into the box, and we can look at them here. Chris is in. David is in. I see Glenn is in. So Baba, you see this rounding top here. Okay, rounding top. I think it's a buy and a pullback. One area to look at here is a 26-period moving average with a stop in the Ichimoku cloud. I actually think Baba goes higher, even though I don't like the story. Buffalo Wild Wings. Buffalo Wings prices have been getting killed lately, but Buffalo Wild Wings actually had a really bad earnings quarter. As we can see here, a lot of consolidation here. Basically simple and easy. I can buy above the highs here, or I can sell below the lows. Okay, it's in consolidation phase right now, which means no buyers or sellers. Disney looks like it's going to break through 52-week highs. So I think Disney goes higher. Alta, ULTA, retail's been in a funk. This stock always performs really well in earnings. For a retail stock, this stock has been on fire. So Alta, I think Alta goes higher. They do have earnings coming up. Historically, trades really well on earnings. I think Apple will test down to 112. TWX, we saw some call buyers in TWX into the close. So TWX here, stuck in the cloud here. Nothing really to do here in TWX. Very neutral here in TWX. Facebook. Here's the link, guys, optionsonthefloor.com/week. We still have some spots left, but not very many. Make sure you take advantage of it. Facebook, I think it takes out the 52-week high and goes higher. So let's talk about the course one more time. We'll look at about half a dozen more stocks, and then we'll call it a night. So this is taking earnings trade to your next level, okay? Trading plan, every trader must have, and it's on demand, so the minute you pay for it, you will start learning. Learn our proprietary-based step-by-step earnings analysis and trading plan. Learn the best option strategies to trade ahead of earnings. Learn how to avoid buying too much premium and volatility ahead of earnings. Learn the best tools for trading earnings setups and how to set up targets and spreads. Also, we're going to teach you guys how to use the thinkorswim scan feature. 4 things about this course. Number 1, 100% money back guarantee. So there's no reason not to take the course. You guys have taken the first step in your trading, which is taking about an hour out of your day to listen to me speak. Now you have to invest in your education. It's like saying you're going to go to the gym once you start losing weight. You need to go to the gym to lose weight. If you guys want to take your trading to the next level, you need to invest in your education. And education is actually 100% tax write-off as well. So number 1, 100% money back guarantee. Number 2, once you pay for it, you can start learning immediately. Number 3, 80% off. It is a $499 course. It is on our website for $499. And number 4, we only have 25 spots. I can't see currently how many we have sold, but we're getting close, but we still have some spots left. Optionsonthefloor.com/week. It's only 99 bucks, and we have about 4 more stocks we can look at here. Okay, so let's go to, got Macy's. Oh, thank you for writing me a review of the book. Macy's gap lower here. Possible low is in here at 39.75. Possible low is in here at 39.75. It is on demand, so you can start learning immediately. UPS. Pretty neutral here in UPS. Let me go here to UPS. UPS pretty neutral here. Neutral to slightly bullish. Should find support here at 102.50. A couple more stocks. FEYE. FEYE is broken. FEYE is ugly looking. Tesla. We'll do Tesla, we'll do Netflix, and then we're going to, if anybody has any more questions about earnings, we'll answer those questions, and then we'll call it a day. So Tesla, neutral to slightly bearish, and Netflix. Netflix was down a lot after the bell. Wasn't it down after the bell? I think so. So Netflix here, neutral, and EXPE. EXPE, neutral to slightly bullish, should find support here at 127.60. Does anybody have any questions about anything besides charting? Does anybody have any questions at all? What do you think? What do you think of the squeeze in W? You know, these Citron things are kind of crazy. I don't really think I have an opinion about Citron either way. Any other questions, comments, concerns? Make sure you guys sign up for this course. If you do not like it, I will give you your money back. If you're not learning, I do not want your money. All right, guys, everybody have a great night, and good luck with the course. And thanks, guys, and I'll talk to you guys tomorrow.